In 1870, a pivotal shift occurred as the United States dethroned Great Britain to become the world's largest economy. Over 4 decades, the U.S. consolidated its power to become the global power broker. But today, a formidable rival has emerged, China. In this video we will compare economies of U.S. and China. At present, the United States stands at the pinnacle of the global economic hierarchy, flaunting a staggering GDP of $23 trillion, as reported by the World Bank. By comparison, China claims the second spot with a GDP of $18 trillion. The United States' economic dominion has persisted since the mid-1900s. However, when considering GDP alone, China's current GDP of $17 trillion falls short by $6 trillion compared to the United States. Yet, China commands the top position globally when seen through the lens of purchasing power parity. Additionally, China boasts a favorable debt-to-GDP ratio of 21%, a stark contrast to the United States' 116%. Notably, China holds the title for the world's largest foreign exchange reserves, towering at a remarkable $3.3 trillion as of July 2023. This is in stark contrast to the United States' foreign reserves, which stand at $242 billion. The magnitude of China's economy is amplified by its population, which surpasses that of the United States by more than fourfold. The United States enjoys a per capita income of $70,000, China lags with $19,000. The United States claims the 8th spot on the global per capita income scale, whereas China holds the 76th position, highlighting the disparities driven by population dynamics. China's economic expansion has been characterized by miracle growth. Since the year 2000, China has consistently achieved growth rates exceeding 10%. In contrast, the United States has maintained an average growth rate of 2% during the same period. China's prowess extends across sectors. It outperforms the United States by 17% in agricultural output and an astounding 77% in the industrial sector. However, in the realm of services, the United States leaves China far behind, with its output more than doubling that of China. China's GDP has surged from $1.2 trillion to a staggering $17.7 trillion since the year 2000. If this momentum continues, experts predict that China could surpass the United States as the world's largest economy within the next decade. China's ascendancy spans multiple dimensions. It has evolved into the world's epicenter of manufacturing, superseding the United States as the top trading partner for 120 nations. The country has also become a vital linchpin in global supply chains and a driving force behind 1/3 of the world's GDP growth following the 2008 financial crisis. A historic moment occurred in 2020 when China outshone the United States by housing the most prestigious global companies on Fortune's Global 500 list for the first time. Furthermore, China's prowess in attracting foreign investments and its robust competition with the United States in research and development expenditures showcase its expanding influence. However, certain aspects remain unshakable in the United States' favor. The US dollar continues to reign as the world's predominant global reserve currency, commanding a staggering 60% of foreign exchange reserves. U.S. equity markets maintain their position as the world's largest, and the nation sustains a substantial advantage in venture capital investments. Moreover, the United States draws visionary entrepreneurs and bright minds from across the globe, offering them unparalleled freedom and prospects for realizing their aspirations. Over the past decade, China has advocated for a shift towards value-added services over traditional factory exports. This strategic move has compelled multinational corporations to expand their operations beyond China's borders, seeking new manufacturing bases to mitigate rising wages and environmental compliance costs. Yet, questions about China's economic data transparency persist. Goldman Sachs projects that China could become the world's largest economy around 2035. This prediction aligns with projections from various institutes suggesting that China's share of the global GDP will rise to 22% in 2030, up from 18% the previous year. Such changes foreshadow a potential shift in the global economic hierarchy. China's influence extends beyond economics. Its ambitious Belt and Road Initiative involves massive infrastructure investments, projecting power globally. China's modernizing military and expanding naval capabilities have raised concerns in the United States. Nevertheless, trade remains strong, with China ranking as America's third-largest trading partner. This economic interconnection is further illustrated by China's substantial holdings of nearly $1 trillion in U.S. debt. China's evolution stretches beyond manufacturing, venturing into innovation and cultural influence. Apps like TikTok boast over 150 million users in the United States, while China's entertainment industry wields increasing clout, evident in its extensive network of movie screens and impressive box office earnings. China's three largest trading partners are the United States, Japan, and Hong Kong. China maintains a trade surplus of $403 billion with the United States and $289.7 billion with Hong Kong, while it experiences a trade deficit with Japan. Conversely, the United States' top three trading partners are Canada, Mexico, and China. The U.S. holds a trade deficit of $50 billion with Canada, $108 billion with Mexico, and a substantial deficit of $353 billion with China. In the broader scope, the United States grapples with an overall trade deficit of $1 trillion, while China boasts a trade surplus of $877 billion. China is the top trading partner to more than 120 countries, while U.S. is the top trading partner to just 30 countries. Holding onto its economic supremacy is paramount for the United States. If U.S. loses number one position, IR will lose global influence, and America's role as defender and champion of democracy and human rights will fade away with time, and U.S. won't be able to sustain its vast military that operates in the entire globe. If China were to become the world's number one economy, significant global changes would unfold. China's increased economic might would likely translate into enhanced political influence and the ability to shape international agendas. Trade dynamics would shift, with countries seeking deeper engagement to access China's vast market and supply chains. The yuan could gain prominence as an international reserve currency, potentially challenging the dominance of the US dollar. China's technological innovation and investment in research could intensify, driving global competition and collaboration. Geopolitical alliances might realign, issues like human rights and climate change will start to get ignored. A recent report highlights that the United States and other Western countries are falling behind in the race to develop advanced technologies and retain top talent, potentially allowing China to establish a monopoly in key sectors. The study conducted by the Australian Strategic Policy Institute reveals that out of 44 tracked technologies, China leads in 37, including electric batteries, hypersonics missiles and advanced radio frequency communications such as 5G and 6G. In contrast, the US remains ahead in only 7 areas, like vaccines, quantum computing, and space launch systems. China's strategic approach and long-term policy planning, as advocated by leaders like Xi Jinping, have contributed to its substantial lead. In many technological domains, the findings suggest that China's technological advancement is not coincidental, but rather the result of careful design and systematic planning. The Chinese Academy of Sciences consistently ranks at the forefront of the technologies included in the study, and China's commitment to importing talent and knowledge further bolsters its position. However, the report also cautions that China's strides could result in monopolies in several technologies, such as nanoscale materials and manufacturing, hydrogen and ammonia for power, and synthetic biology. History has taught that when a rising power meets an established power, conflict is inevitable. What do you think? Will China and US go to conflict in future to attain the position of superpower?